JSClick Weekly Reflections. On this episode, I'm going mainly to concentrate on these 3 trades that I took last week. These 2 trades, together with this trade that I took on Friday. So we are going to dive into the executions, the analysis behind the trades and the reason why I took them and how they ended up playing out. So there's a video that I've just uploaded highlighting all the trades that I took last week, including these ones that I want to analyze. But the reason why I want to analyze the trades that I want to analyze is because of one reason or another. It's why I want to reflect on those trades and not all of them because of time. So coming on to this trade, these 2 trades, why did I enter those trades? So price action, as it was, price was coming down from all up. It was on a bearish bias, going down, but the bias changed immediately. We came all down, took all of this liquidity, then we came up, changing up market direction once we closed up above here. So all of this time, as market was going on down, it was generating liquidity in form of equal highs. As we see here, that these equal highs that were left intact, price kept on going down. Then as we were coming up again, retracing, remember this all was a retracement for this swing up here. We were again generating sell side liquidity in form of equal lows, relative equal lows here. So market was again going to come and attack these relative equal lows to proceed going lower, again continuing to add on this liquidity here, gearing up for a long move that was coming. So once I was seeing is, in fact, this attack was, it was the reason why I took these 2 trades here. Again, you can check on the analysis video. The basis why I took this, my target was this equal highs here, but I ended up closing the trade because of the news that was coming, and the news came and caused havoc, came all the way down, running all this liquidity that was all the way here. But market again came and changed direction by trading up above this swing that went taking up all of this liquidity. So what did that tell us? That told me that market was done with the going down, or with the sell buyers going down. So now we were changing direction, going upwards. Now take note of something. You see this liquidity that was generated as price was going up, the same liquidity is not here, but it's lying here as market as we are going up. So what does that mean? That means that market still wants to come down, take some of this liquidity, continue building orders to come and attack up this liquidity that's resting here. So once again, once the market came and created this high here, it added up on this liquidity that was resting up here, then it tanked down, coming to take this relative equal lows that were here. Again, it just took it partially, then it proceeded again coming up. So I couldn't manage to get a trade in either here or maybe here. Then again, it was late during my time according to where I stay. Then coming on now to this day, which was on a Thursday, I was really looking up for this relative equal lows to be taken, and that was the reason now behind this trade here. We had a 4H FVG that was lying up here. As market was going down, it left a fair value gap here going down, and that fair value gap was left intact up until this on Thursday, after we were done with all the selling activity down here and we came up. We jumped into that fair value gap and respected the half of it. That's not the only reason, but we came changing market structure down here. Once this candle traded below here, that was a change in market structure, and that's why I took this sell order here, again targeting this relative equal lows that was here in conjunction with this fair value gap that's here. So I was early again. I activated that order earlier, and I ended up being stopped out on my first trade. But again, as I saw the liquidity up above here being taken, and market quickly came back down again. Then I knew we were up to still come and take all this liquidity now that has just been generated here. So what was my next course of action? Attack that trade according to this fair value gap. Once market traded back, actually I was looking at this inverted fair value gap here that was here, and that's what I activated. I had a pending order there, and market traded up to it and activated it, and my stop loss was not all over here, it was just above here, because there was no reason again for market to come all above here, having when it had taken all this liquidity here on the upside, and we were not yet done with the sell side business down here. So I was just calm and collected and chill, but I was again ready. If my stop loss was taken out, then that would have been it. I wouldn't have activated any other order. But true to my analysis, market went up, came back down again. There were some news again that were taking place around this time, but I just kept my cool, didn't even flinch on my order. But once I saw this news candle here trying to misbehave, I was almost about to close the order. But once the candles closed bearish, I was just stay put, and I knew that I will be activated. And true to my was I was activated here, and I ended up now recovering the loss that I taken in the early morning, plus bagging in some of the profits that were there. So why did I want to really talk about this trade? Is because I loved it. It went according to my plan, and we went to target the liquidity that I wanted to see it being targeted. So that's why I didn't give up. That's why I ended up again taking another trade. It's not because I was taking the trade because of a pattern, no, but because of the reasoning that we weren't done in taking the liquidity that was lying above here. Now, once this liquidity was taken, now focus was shifting again to come and take these equal highs that were resting up here, because I wasn't fully satisfied with how it was taken. I wanted to see something big like this one take this liquidity. So I was now gearing myself up for another long order to come and attack these equal highs. But at this moment in time here, so usually after a trade, I usually try to calm myself down. Basically, if it's a winning trade, because you are more likely to create a mess immediately entering after just winning. So once I saw this change in market structure, and it happened with a big displacement coming down here. So as the retracement was coming down, I was keenly watching on this breaker that was lying here. So market did not retrace all the way back up onto there. It decided to come and take this swing low, and later came down here. So why did I not activate as market was coming down here the same way I did here? Because now the liquidity that I was targeting had been taken fast as market was coming down. So now this was a low probability trade. I didn't want to engage myself into it. So I was waiting again for another price action to see if price will come and take us up back into this level. So once as market was coming down here, there was a 4H wick that was lying here and was being respected. So I was just watching for a change in market direction to come again and attack this form of liquidities that was being generated as market was coming down. We can see there's equal highs here, there's another equal highs here that have not been tampered with. So that's all form of liquidity that's resting there. So I was just looking for a change in market direction to come and attack here. But now I ended up activating my order too early, because I was more focused on the lower time frame, the 5H. It had a change in market direction, but the 15H but the 15 minutes, sorry, didn't have a change in that market direction. So for this trade to be a viable one, I would have wanted to see market come and trade up above this swing high, but that didn't happen. So I was much more focused on the move going upwards, that the change in market structure on the 5 minute deceived me and duped me into entering early into this trade. So that's most of the reason why I wanted to talk about this trade, is that as much as you have a target that you really want to see it being targeted, it's always important to come and follow your trading plan, or what it is, a system that you usually trade and usually trust. For this, the entry, it was not bad, because it was based on the 5-minute change in market direction, but that time frame was not enough to satisfy the trade criteria to come all the way and attack this liquidity, because liquidity was lying up on the 15 minutes, not on the 5 minutes. So what I should have done, I should have simply waited for market to come and close up above here, so that would have been at least a good high probability trade to come and take off all this liquidity. But since it happened, and I took the loss that I took, and it wasn't much of a loss, it was just a stop loss, but I learned something from there. As much as I have liquidity that I want to see it being tapped, it's always good to wait for the change in market direction. The same thing that happened here. Market took a liquidity here. We had a low here. We came and took again this high, and we came and displaced below here. So like this entry was good. It was a high probability entry because it was in line with the market structure on this time frame to come and attack this liquidity. So going on forward, it's something again that I'm looking to change, as I'm looking to improve my system day in, day out. So these are the things that I'm keenly watching on, looking to see how I can improve my trading system to perform better the next time that I'll be executing. So all of this buy side liquidity that was generated in form of these equal highs came and was attacked yesterday. I was keenly watching them. In fact, after market came and changed direction here by closing up above here, I was really watching on this retracement. But as the retracement was coming, and I was watching this inverted fair value gap here to be tapped in, or basically to be respected, and that's what market came and respected it. But by the time I was coming again to the charts, this move had already happened. So I wanted to see this fair value gap, inverted fair value gap, being respected and market respond going up higher. So once I came back to the chart, price was around here, and I tried to wait for a retracement to this candle breaker right here, but it didn't come. So market proceeded on, taking this liquidity here. Started with this one, took this one. Now there's this one here, which is still pending, remaining. This one and this equal highs that are still remaining up here. It's a price action that I'm eyeing, that I want to see, and I can see now we are ready. I can see we are ready actually, and I'm going to activate my trade right now as this is coming down, because we came down, we took out liquidity in form of equal lows that was resting between here and here. Now we've displaced up above this current liquidity here. Now the only liquidity resting is up above these equal highs. So that sums up as a good entry to be taken. And I'm actually going to activate it where it is and target these equal highs here. So do we have much to go into? 1, 2, okay, let me come here. Yeah, that's a good one. Then stop loss, we'll put it just somewhere there. I'll be taking the trade in regards to this order block here, as we have come respected this fair value gap as well as this breaker here, and our target being these equal highs that are up here. So that's good. I'm going to take this. So this will begin the analysis again now for this trade going in forward, and we'll wait and see what will happen. I'm actually going to put it there. Create order limit, risk 0.5, and buy. And we wait. Now we are going to do a follow-up video on this one and see what's going to happen or what's going to unfold in form of this trade, and we'll see. So that's